what do you do when you're raising capital for smaller deals? You're not going to be doing big time syndications. That's where we kind of fit that space in the market where we're helping people get the ball rolling, raise their first several $100,000 and get them poised and ready to go for the bigger syndication.
The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. And we're just going to jump right in with my friend Dave Dubeau, who was actually the guest on episode 47 of this podcast. If I'm not mistaken, this will be episode like 209-ish. And basically, Dave came on to the show and shared his backstory and what he was up to at that point. And really, his focus has been really heavily in the raising capital space. And he just has a ton of chops and expertise and great value add for you guys listeners that are looking at raising capital, and for you guys listeners that are looking at investing passively in deals, which everybody should always be doing if it's in your wheelhouse. But Dave, that was June of 2021, my friend, actually over 2 years ago that you were on the show.
That was right smack in the middle of a pandemic, I believe.
Right.
Times have changed, Tate. That's good.
Yeah.
Good stuff.
Yeah. And that was such a crazy year, the biggest year ever in multifamily, as it turned out, biggest year by volume, lowest cap rates. I mean, it just every metric you look at, we were right in the middle of it at that point.
It's a beautiful time, that's for sure.
Yeah, for sure. So Dave, welcome back.
Thanks so much for having me back. It's always a ton of fun being interviewed by you and interviewing you. I've had the pleasure of having you as a guest on my show as well. So yeah, thanks for letting me show up again. I appreciate it.
Yeah. And just right out of the gate, tell the listeners the name of your new daily podcast, guys, daily podcast. So you got to tune into this. What's the name of it, Dave?
It's called the Property Profits Real Estate Podcast. You can find out all about that at propertyprofitspodcast.com.
There you go, guys. So right out of the gate, there's your one of many takeaways from today. Just go to propertyprofits.com and check out the new daily podcast. And here's the good news for everybody listening. If you're listening to this, the chances that you've invested in real estate in the past, whether that's single family or even small multifamily or other asset classes, maybe you've been a passive investor, maybe you're just thinking about getting into real estate and you're looking at the commercial space. But the cool thing about Dave's new podcast is he really wants to hear from everybody. Like, how did you describe it? Kind of every man's.
Actually, the podcast has been going for a little while. We've been going since 2018.
Oh, okay.
But our focus in the past was on interviewing the gurus, the authors, the experts, all that kind of stuff, which is fun. That's great. These days, I'm doing that, but I'm putting a lot more focus on interviewing what I call everyday people investing in real estate, because I find that a lot of our listeners are at that level. And if they hear from somebody that's just rocking and rolling with thousands of units under their belt, that's great, but it seems out of reach to them sometimes. But if they hear from somebody that's at a similar level or maybe one step ahead of them, then it really resonates with them. So that's been the focus of the podcast these days, and having a lot of fun with those kind of interviews.
Yeah, that's so cool. For me, I actually was on my friend Ian Brown's podcast this morning as a guest, which is a rare treat for me. I love both sides of the microphone. And getting to be a guest is obviously an opportunity to share more from your perspective than maybe I do on this show even. But it seems to me he's got his own podcast that obviously that he's doing. I've got mine. You've got yours. And all three of us, and I think this is true largely across the board, all three of us just freaking love doing it, right?
Oh, yeah,
Like,
for sure.
it lights you up. And for me, like when I started doing it 3+ years ago now, I did see the work. I knew it was going to be work. I knew it was going to be learning new things. I thought I was going to have to produce it myself, which was a big assumption. And I don't do that at all. But I didn't know what I didn't know about how cool it would be and how fun it would be.
That is good. And I always recommend to people, if you're thinking about doing a podcast, great, but you should definitely be thinking about being a guest on podcasts, which I would think you'd probably agree with me, Tate. It's a hell of a lot easier being on the host side and all that kind of stuff.
Yeah.
So get started by guesting on other people's podcasts. There are just so many benefits to that. So yeah,
that is like a home run takeaway for you guys, for listeners. Don't miss that point. Like, think about it this way. With my coaching clients and my mastermind members in Multifamily Octane Mastermind, I am constantly having them visualize being on somewhere like 20 podcasts a year, right? One every couple weeks. And that's totally attainable, totally achievable. And look, you are reaching 20 different audiences through that activity as essentially the expert guest, right? Or the guest that's adding a lot of value. So you're building credibility. You're also building your skill of doing that, of being a podcast guest for future endeavors. And I do 100 podcasts a year, 2 a week. I would argue that if I did 100 other people's podcasts a year instead of my own, I would reach like exponentially more people, right? And I wouldn't do that because I love my baby, but I'm always trying to be a guest more and more often.
Oh, well, I got some great tips then for folks that are interested in being a guest. I put some focus on this a couple of years ago when I first got interviewed by you, Tate. I actually got interviewed on close to 150 podcasts in about a year. So I really, really put a lot of focus on that, got that dialed in. But as far as like your listeners, your viewers, if you're what I call a mom and pop real estate investor, then 20 would be great. But even getting booked on your first podcast
there you go.
is huge because there is so much that you can do. There's so many different ways that you can leverage a podcast. And I'll be frank with you, Tate, from my perspective, from that point of view, as a mom and pop, the best way to leverage being on somebody else's podcast isn't even so much getting exposure to their list. It's showing your people, showing your friends, your family members, your coworkers, your associates, people that are in your network, that you are a serious real estate entrepreneur.
Yeah.
Because I don't know about you, Tate, but a lot of folks are kind of like the best kept secret. They're busy doing their deals. They're doing whatever they're up to. Their friends, their family members, they don't quite get it. They don't quite understand what the hell they're doing.
Yeah.
So especially when it gets to the point where you're looking to bring on joint venture partners or private investors, you really need to start looking at this, at how do you boost your visibility so that you are seen as a real estate expert, right? Because it's all about the know, like, and trust factor. For people to invest 50 or 100 grand with you, they need to know you, they need to like you, and they need to trust you with their money. So by being seen as an expert, by being interviewed on somebody else's podcast, it's great to get exposure to that person's followers. That's fine. It's even better to use that as a jumping point to kind of point yourself to people who already know you and go, oh my God, Dave's been interviewed by Tate on Tate's podcast. Right. Dave must know what he's talking about if he's a guest on somebody's podcast. Does that make sense, Tate?
Absolutely. And look, you can put links to these appearances on your landing page for people. You can put them on social media, LinkedIn, an awful lot that can be done, like leveraging this activity. And I think the backfilling your credibility, as a friend of mine said, with a podcast, either your own or appearances, is immensely valuable. Like, investors will Google you. They will check your website out. And if you have thought leadership out there in the way of YouTube videos, podcast appearances, et cetera, they're going to check all that out. And That's a great way. Like you said, Dave, know, like, and trust, right? That's basically a really great avenue to get there. So I love that. And yeah, just want to kind of dive in with you from there. You've gotten very passionate in the thought leadership space. Obviously, you've been in it for a long time. And it seems to me, if nothing else, you're ramping up. You're doing more and more. I'm trying to impact more and more people's lives. You've got some exciting internet resources out there on different landing pages. You want to just kind of high level what you're up to these days and what you have to offer folks?
Yeah. So what I'm up to these days is I work with everyday people investing in real estate, help them get started with raising capital. So I've kind of got a capital marketing agency, for lack of a better term. And we provide done for you services to help people set up things like investor databases and websites and marketing materials and pitch decks and all that kind of stuff that most mom and pop real estate investors aren't very good at because they don't have a background in that. So we kind of come on board as people's marketing department for raising capital. And as far as what I'm up to, lots of stuff. I've got 2 different podcasts. I've got my Property Profits podcast, which you've been a guest on in the past, which has been running for a number of years now, since 2018. I think we're getting close to episode 500. We've also got a newer podcast called the How to Raise Capital 101 show for real estate investors, which is all about raising capital. So that's my main focus. And then as far as the investing side of things goes, I'm more on the passive side these days. So more of a passive investor in multifamily properties.
Yeah. Yeah. Okay. So a few questions on that. As a passive investor, talk about your criteria, your buy box, if you will, what you look for in teams, what you look for in properties.
I'm in a very fortunate place, Tate, because we work with a lot of real estate investors, helping them to raise capital, right? So I get to know them very, very well, get to know what kind of deals they're doing, get to know the markets that they're investing in, get to know the kind of properties that they're investing in, get to see who their team is, what their background is. So these days I tend to invest with my own clients because those are the people that I know the best. So it's ranged anywhere from larger multifamily properties to smaller ones, even as small as 6plexes. So for me, the main criteria, obviously the dollars and cents make a lot of sense and you have to underwrite things. You have to double check the numbers. But for me, it's really about knowing who the operator is.
Yeah. Yeah. At the end of the day, when you write a check to an operator or wire your funds in, you are investing in them.
The deal's the collateral for your money. That's basically what it is.
That's right. Yeah. You're investing in their ability to do what they've said they can do in their business plan and their webinar for, their pro forma, their offering memorandum, and their PPM. And that's really what's up. And look, not every deal goes well. Not every deal goes ideally, even there, I think.
Or according to plan.
Very rarely plan, right? And sometimes that's team level, sponsor level stuff. And sometimes it's market level stuff or property manager level stuff, which it does ultimately come back to you, of course. But that side of the game is no joke. And like getting that business plan in place, getting everybody on the same page and hitting your target rents, your vacancy, your target occupancies, et cetera, is huge. That's where the rubber meets the road. By the way, real quick for listeners, I have a template for what I call an asset management plan, which is, I have it right now in PowerPoint doc, but it's a graphically laid out plan for every single thing that you expect to have happen at that property once you buy it. You give that to your property manager, you give it to all of their employees that are involved with your property and anybody else, vendors, even lenders. Like you would want to show anybody involved in that property what you plan to do. And then you have everybody sign it, right? Especially your PM. So now you're all on the same page and they've signed on for what you expect out of them. And I'll credit my buddy David Tupin for that one. So if you guys want to email me or reach out to me on social media, I'm more than happy to send you that template. It's tate@glequitygroup.com. So hit me up on that. So on the passive side, Dave, it sounds like you really made that shift in terms of your own investing. Are you also raising capital?
I do from time to time, which makes sense because that's what I focus on. But again, I typically join forces with clients that I'm working with and help raise capital for their deals, which I'm typically involved in directly as well. But my day-to-day thing is, Tate, I'm more of a marketer than a real estate investor, even though I've been investing in real estate since 2003. It's been quite some time. My secret sauce, if you would, my superpower, if you would, is around the marketing side of things. So that's why I really enjoy working with other real estate investors and helping them to find joint venture partners and helping them to find private money, private investors for their deals. That's where,
it's huge.
And really helping people get started with that. Because there's lots of guys out there that help people once they're in the big time syndication space. But what do you do when you're just getting started with that? What do you do when you're raising capital for smaller deals? You're not going to be doing big time syndications. That's where we kind of fit that space in the market where we're helping people get the ball rolling, raise their first several $100,000, maybe up to 1 to 2 million over time, and get them poised and ready to go for the bigger syndications. But I don't know what your opinion is about this, Tate, but I think people need a bit of a track record first. Number one, in investing in real estate, so you know what the hell you're doing. Number two, working with joint venture partners and perhaps private lenders. So you got a little bit of a track record with that, so that then when you're moving ahead and you're starting to do syndications, you can point to proof of concept and it's not your first rodeo.
Yeah. And obviously we've talked about this many times on the show. Like, one of the best ways of doing that is being an LP in somebody's deal, right?
Right.
A sponsor's deal. Typical minimum is 50 grand, but there's some soft-hearted syndicators that I know very well that might let you into their deals for less than that if you really, really want to get in and you don't have full 50. Like, so the point is, you can get that track record of at least having ownership in an apartment community or 2 or 3 by investing as an LP.
I would recommend, like, if you want to become a general partner in one of these kind of deals, maybe even start with something smaller and don't just invest passively, but actually pay to play. So figure out a way that you can put your money in and actually be involved hands-on in doing some of the stuff in that deal, because it's going to come through when you're trying to raise capital, whether you know what the hell you're talking about or not, right? And if all you've done has been an absolutely passive investor, then quite frankly, why the hell is anybody going to invest with you, right? So be more on the active side and you can pay to play there.
I mean, that's taking what I was suggesting to the next level. And I've mentioned this too. Like, if your goal is to be a general partner, to do your own deals, or to team up with other people on doing your own deals, find a syndicator that is a teacher, a coach, a mentor that you naturally have rapport with, that you know, like, trust, and talk to them about your ultimate goal, which is to be doing your own deals. And if they come in as an LP rather into their deal, can I be on the GP? Like, straight up, like,
even if you're not like registered as a GP, but can you help out? Can you participate actively? You want to actually learn as you're going. You don't want to just be a purely passive investor. Yeah.
Well said. I mean, I think that's like one of the very, very best ways to get in. And look, ideally, that syndicator that is leading your deal is somewhat of a mentor to you and hold your hand a little bit and include you in asset management meetings and important email chains and those sorts of things. And it's just a fantastic way of breaking into the business. All right. So I want to cut to the chase on something that I am personally very, really interested in. From the point of, let's say, LOI, you get a signed LOI on a deal. Talk to me about your general process, especially with marketing. So between the LOI signing, obviously the PSA signing comes next, usually a week, 2 weeks later. And then from that point to, let's say, the point of all investor funds being in your account. Can you kind of walk us through when you do that and you guide people to do that, what that looks like?
Well, to be perfectly frank with you, Tate, our specialty is really helping people to get those investor meetings booked in the first place. And then once they've got we usually get people to sign off on an LOI or an expression of interest before we've even got a deal in hand. So my whole philosophy is chicken and the egg, which comes first, the investors lined up or the deal? If I could wave the magic wand, it's get your investor ducks in a row first and then go looking for the deals. It just makes your life a lot less stressful. So our whole focus, because we work with investors all different stripes. So we work with people that are doing joint ventures on a single family home to flip a house or to do a burr on a property, all the way up to people starting to do smaller syndications. But we tend to work with people that are more at the beginner stages of that whole process and not into big time syndication. So I prefer not to talk about the nitpicky side of that things because we don't help people out with that.
Okay. So if I hear you, specialty, your superpower is helping people develop their investor pool, their investor club, whatever you want to call that, their CRM before they have deals that they're pumping out to their CRM and to their...
If we wave the magic wand, it doesn't always work out that way, right? Because they're usually active investors. So most of the people that we're working with, Tate, have self-financed their first number of properties, whatever that looks like. And now they've run out of cash and credit and looking to scale up and bring on investors, bring on private capital, private investors. So we help them get started with that whole process from scratch, right? So from day one, like I haven't had any experience working with an investor before, to getting them their first anywhere between 500 grand up to 1-2 million kind of thing. Not all in one fell swoop, but over time. So we're kind of like that beginning stages of the capital raise. And one of the things that I think is super important, which we've touched on a little bit, is in order for you to bring on investors, no matter what stage you're at in your career, you really need to boost up your exposure. You need to be seen to get the green. So that's very, very important. Yeah. And we talked a little bit about getting on podcasts as a guest, but there are all sorts of different things that you can do as well, in addition to that. But I think it's really important that once you start or you get serious about raising capital, you need to be seen as that authority. What are your thoughts on that, Tate?
I could not agree more. I think especially in today's kind of attention-starved economy, like attention is one of the most precious commodities or resources or currencies that there is in today's world. Like, our attention spans are shorter than they've ever been. We've got like less than a second to grab people's attention in a social media post. That said, it's still free, right? Like, arguably, you're not paying for Facebook, you're not paying for Instagram, you're not paying for LinkedIn. So,
well, that's one of the reasons I love podcasting so much, Tate, because think about this. You've got somebody who's listening to you, you're in their ear. It doesn't get much more intimate than that, right? They're jogging, they're working out, they're driving to work, whatever. You are keeping them company right inside their eardrum for whatever that is, whether that's 20, 25 minutes, 40 minutes, an hour of pretty much undivided attention, which is why you do what you do with podcasts, why I do it as well, and why I just encourage people to be guests on podcasts, because A, it doesn't cost anything. B, you've got a lot more than 1 or 2 seconds to grab people's attention and really get them involved in what you're talking about. And C, it is just an ultimate shortcut to getting that exposure and being seen as a credible real estate investor. So if you want, we could talk a little bit more around the whole getting booked on podcast type thing. I'd like to compare notes with you. Yeah. Because it sounds like you've been booked on a number. I've been booked on quite a few, and we can give your listeners some tips on how they can get booked as well, if you like.
Let's do that. I do want to ask you before that, it's been on my mind the last few minutes here. What are your thoughts on personal branding and social media and what people should be doing as capital raisers in that area?
They need to be very careful is what they need to be doing. So social media is wonderful and it's dangerous at the same time. And there's so many people doing it wrong. So quick caveat here. I'm not a securities guy or a lawyer or anything like that. I'm a marketer and a real estate investor. I'm sharing my opinion. Okay. So that's my caveat. But bottom line, here's my understanding, Tate. We have to be very, very careful with what we do on social media so that it doesn't come across like we are soliciting. You're already set up and you've got the offering memorandums and the exemptions and all that kind of stuff. And you're set up for that. You have to be very, very careful about how you go about things on social media. So when it comes to Facebook or Instagram or LinkedIn or whatever your flavor is, I would say focus on, the personal brand, more on the personal side versus a big corporate looking thing. Yeah. And number two, on the education side. Yep. So you are showing people what you're doing. You're not directly soliciting. Yep. You're not saying, hey, DM me if you want to be part of this deal. You're definitely not talking about guaranteed returns or anything dumb like that. You're just showing people what you're up to. So Tate, you're a perfect example of this, right? So next time you're out touring a property, you're doing the underwriting on a deal, you're actually physically on site doing something somewhere, take that cell phone, video yourself, do a selfie video, walking around talking about the deal. Just educate people as to what you're looking for. Here's what I'm looking for when I'm looking at a property. Here's a big red flag for me. So provide the education there to actually lead people to kind of reaching out to you. And then you can take that off social media and get that relationship started. Does that make sense? Does that answer
Absolutely.
the question?
I think it's so well said, especially on the personal branding side and how to go about that, like just adding value. If 80, 90% of your posts are adding value, adding educational items, first, you're building expertise, you're letting people know who you are and what you're doing without directly soliciting. I really like that. Quick note on SEC exemptions, and we won't deep dive this, but we at Greenlight only do 506C deals, and you've got two basic SEC exemptions with securities and real estate deals, commercial real estate deals is in syndications. You got 506B, 506C, right?
B for buddies, right?
Yeah. B for watch your butt too.
Yeah.
Right? Because the B is where you get in trouble. Because you are allowed to bring in non-accredited investors. They need to be sophisticated investors, and there's a technical definition for that. But as an accredited investor, you need to be worth $1 million or make $200,000 a year. If you're not that, then you need to invest in 506B opportunities because the C's aren't available. So real quick cost benefit analysis on that for us is we would do a 506B only for the reason of if we had a stable full of non-accredited investors that wanted to invest with us, right? And think about that investor. They're going to be $50,000, maybe $100,000 investors. And that's great. And that's how the world goes around in this space. However, with a 506C, you lose the ability to bring those people into the deal, right? So that's your cost. Your gain is that you don't have to have pre-existing relationships with the accredited investors like you do with sophisticated investors. And you can market the deal. You can go far and wide. You can go on podcasts, talk about specifics. You got to be tactful, I think, when you're sharing projected returns and do all kinds of disclaimer and be very transparent, but you can talk about that stuff. You can do paid Facebook ads, et cetera, right? Go to your big mastermind group that's got 500 people in it, blast it out to them. So for us, the advantages of the C and the particular advantage of being able to sleep a little better at night because we don't necessarily have to cover our butt so much, especially on the pre-existing relationship thing.
Here's the big advantage I see that you've got, Tate, is you've got a track record already of doing a bunch of these kind of deals.
Yeah.
You've been running your podcast for years. You've created a platform. Your personal brand is out there. People know that you're doing these big deals, and you can talk with accredited investors intelligently. The challenge is when you're doing that first deal, how do you get the attention of an accredited investor if you don't have a track record, right? So it's the chicken and the egg kind of situation. Most people, I don't know if you started out this way, most people start out with, hey, they got to do the 506B side of things, or they're doing smaller deals, joint venture type stuff.
Right.
Those sort of things to kind of get their feet wet, to get that experience, build up that credibility so they can start getting attention from those accredited investors. So completely agree with what you said. I just see so many people who don't have everything set up to bring on accredited investors, shouting far and loud, far and wide on social media about their deals, offering guaranteed returns, all that kind of stuff when they aren't set up for it properly. So that's what I'm worried about. Yeah.
Yeah. And one quick note to a point you just made is when you're starting out with no track record, there are options, right? Like when I started out in this business, our mutual friend, Corey Peterson, was my mentor. I was in a paid coaching mastermind with Corey. This was pre-COVID. So there weren't like Zoom meetings, that didn't even exist yet. We met in person in Phoenix 3 times a year, and I learned the business from him. And one of the things he afforded us the ability to do is include him on our company profile kit that we use to market who we are to both investors and brokers. He and his wife are advisory partners in our company in Greenlight Equity Group. That was legit. He looked at a lot of deals with us. We didn't end up doing one with him, but he was willing to and eager to jump in on deals. Amongst other things, we were able to include his portfolio and his track record in our
huge.
company profile kit.
Yeah.
So little hack there for you guys, even a potentially big hack. And this kind of gets to the whole concept of like, this is a team sport, right? Like we say it all the time. And anything that you need to get a deal done is available in a partnership, whether it's the deal itself, equity, sponsorship on the loan, like every piece is available through somebody else. So keep that in mind when you're starting out. Like I'm a one-on-one coach. I have one-on-one clients that I coach. And then we have a kind of a smallish, powerful mastermind, Multifamily Octane. Every one of those guys, when they build their credibility kit for their business to start out their broker relations, especially, has me and my partner, Carl, in their credibility kit.
They piggyback on you guys. That's smart.
Yeah.
That's
so
very, very smart.
It's not dishonest, right? Like we are legitimately on their team and we're legitimately looking over their shoulder and holding their hands. And
if they find a smoking deal, you legitimately want to participate in that, right?
Absolutely.
So, yeah.
And we're raising capital and we're looking at doing whatever we can for everybody to succeed together. So back to, I was asking originally about from LOI on the transaction on a purchase of a property to like the collecting of funds, closing the deal. Sounds like maybe what we could talk about that would be even more valuable would be how you coach people that are kind of starting out from scratch, how to get that whole thing going, their CRM, how do you call it? Their investor base, what do you call it?
Yeah, well, get their first investors on board. So this would be more along the 506B side of things. So bringing on friends, family members, coworkers, business associates, people that you have a pre-existing relationship with. But bottom line is, whatever stage you're at, it's really important when you're first starting out. But you got to build up that exposure, right? That's really important, Tate. Yeah. So like you were mentioning, you coach your guys on getting booked in on 15, 20 podcasts. Yeah. I guess the question would be, how do you go about doing that? So I've got some tips for you and tips for your followers if they're interested.
Perfect.
Of course, you can be on my podcast. I'm looking to interview guys and gals just like you. So you can just go to daveinterviewyou.com, daveinterviewyou.com. That's a shortcut.
Great domain.
I love first podcast first timers. That's a shortcut. But then to get those other podcasts, here's what I did, Tate. And I'll tell you the story behind this because somebody used this on me. When I saw it, I went, holy crap, that's so smart. That is so slick. And it worked on me immediately. And so I robbed and duplicated that. And that's how I got booked on 150 plus podcasts in a very relatively short period of time. Here's the trick. So you decide which podcast you want to be interviewed on. Mm-hmm. Tate's might be a good one. Hint, hint, nudge, nudge. So that might be a good one, right? Yep. Yep. And then what you do is you go listen to a couple of episodes of Tate's podcast or watch it, whatever you want to do. And then you email Tate. So here's what this person did to me. She listened to my podcast. She sent me a lovely email. She said, hey, Dave, love your podcast. Property Profits Real Estate Podcast is great. I especially loved the interview you did with Tate. And when you guys were talking about XYZ, I got a lot of value out of that, right? So she mentioned a specific episode. She pulled something that was a takeaway for her from that episode. And then she said, hey, I liked it so much. I just went ahead and I left you a 5-star rating and a review. Because what do all of us podcasters love, Tate? Yeah. That's how our podcast rises. That's how more people hear us. That's how it gets boosted the rankings. But then she was extra smart. She didn't just tell me that. She showed it to me. She did a screenshot of her rating and of her review.
Wow.
She put that in the email. I'm going, holy crap, that's great. Sure, I checked up and there was her legit. She left a rating review. And then she said, oh, by the way, I would be honored if you would consider having me on your show. Mm-hmm. I think I could bring some really good value to your audience talking about whatever her topic was, right? If you're open to that, I'd love to have the opportunity to be on your show. Bang, immediately I got back to her, got her on the show immediately. And then I just really implemented her process, I took it, it became my process as well. Okay. I wish I could remember her name so I could give her full credit for it. But 500 episodes in, I get my names mixed up sometimes. But bottom line, that's the trick. So if you're doing this, let's say you wanted to get booked on Tate's show, listen to a few of Tate's episodes, take one of those episodes and what your big takeaway was from it, email Tate, do the rating review thing, screenshot that, and then give Tate a very soft pitch about what value you can bring to his listeners. Because here's the thing, right? Tate doesn't want to just bring on anybody talking about anything. The idea is to bring value to the listeners. So here's the good news. You don't have to have a ton of experience under your belt. Just figure out something a little bit different or maybe unique or something inspiring about your story that you can share that's going to make you stand out a little bit. But if you do all of that, then you are going to get booked on all the podcasts you want.
Oh, man, that's gold. So huge stuff there. Take some notes if you haven't already. Listen to this whole thing again, but listen to that last 5 minutes or so again that Dave just shared. And I'll just add a couple things. So
yeah,
I think it's you 10x your ROI on these podcast returns if you have a downloadable resource that you can pitch people on the podcast. In our case, go to investwithgreenlight.com. I've got a killer resource list for active investors, or I've got a great due diligence checklist, or I've got a great ebook for tech savvy invest, whatever it is, and give them a very frictionless way of getting that resource.
Your lead magnet, right? That's what that is.
Your lead magnet.
Yeah.
And they have to enter their name and usually email address, and phone number is usually optional to get the download. And then that's in your CRM. And if you've got that all set up, well, we use Active Campaign. That goes right into Active Campaign. They go into an auto drip email campaign as a new member of our group. And that's how we build our list. So I think if you don't have a call to action of some kind that captures people's contact info for you, take the time to put that together. You can hire somebody on Upwork to help you build that, and you can get it done in 2 to 4 weeks. And then you're in business, right? Plus, you've got your brand out there, your colors, your logo, your story, etc. I would put that into place. And there was another big point I was going to make about what to have in place when you go on these shows. But I love the personal touch, Dave, that you suggest here with actually listening to the show, right?
You lead with the giving hand, right? So
yeah,
I don't know, you get pitched all the time. I want to be on your show. Here's how great I am. Here's how many doors I've got under management. Here's how awesome I am, blah, blah, blah. It gets boring as hell after a while, perfectly frank, right? When that person led with the giving hand, hey, I love your show. Loved that episode. Here was my big takeaway. Give 5-star rating and review. That was like, wow, that's nice. That's classy. I really appreciate that. And then the other thing is, a big tip for your listeners is leverage the hell out of your appearance, especially if you're just getting started with podcast guesting. There's 3 different ways that you can leverage this before, during, and after your podcast appearance. So before, so for example, if you know you're going to get booked in on Tate's show, or you know you're going to get booked in on my show, let everybody know, hey, I'm so excited. I'm going to be getting interviewed on the Property Profits Real Estate Podcast next week. I'll let you know when the episode drops, right? So you can just do a little shout out then. Then the day of, here's a big tip for you guys. Typically, most of these interviews are done on Zoom, or they're done on Riverside, or they're done on some sort of a video platform.
Yep.
Take a screenshot of you and the host.
Yeah.
Take a screenshot of you and the host. And then when you're done your interview, post that on social media. So thrilled to be interviewed by Tate on his Apartment Guru show today. Absolute honor. I'll let you know when the episode drops, right? So that's your second leverage. And again, this is all going to your sphere, your contacts, people that are on your database, something that's of interest for them. And then the episode drops, same thing, right? You get the episode artwork, put that up on your social media, put the links in there, all that kind of good stuff, put it up. You said, Tate, on your website, get some of that SEO magic there with those backlinks and whatnot. And that's the third way that you can leverage your appearance. Any thoughts on that?
It's brilliant stuff. And any good podcaster is going to provide you with artwork, thumbnails. We provide our guests with like 10-second Facebook reels or Instagram stories, so you can leverage the different formats to get the message out there. Yeah, I mean, it's tremendous. And it just keeps going, right? Because that's an evergreen piece of content. It's always going to be out there. So it's going to constantly continue to build on top of what you do subsequently. And you can use it, like I said, landing page. You want to like eventually, if you got 5-6 podcast appearances or YouTube, a lot of us repurpose the audio and the video from these podcast recordings to YouTube, which is, I think, is a great way of consuming these podcasts, because you just get the face-to-face and the body language and facial expressions. But have a page on your landing page that shows people those episodes in all in one place. I think I've got like 25 different of my own guest appearances on our landing page.
That's a really good tip, Tate, that I have not taken yet. I've got a good takeaway here because I've been on 150 whatever podcasts, but I haven't got organized to put them on one page on my website. That's a really smart idea.
With your catalog, you just take the greatest hits, right? Like the stuff you want people
Well,
to...
I mean, all those backlinks, why not put them all in there, right? It just helps, right?
Yeah, absolutely. Sure. Dude, what is like next for you, Dave? It seems like you're really in a groove here. You know exactly what you're about and what value you bring and how to help people. Where do you see this going from here?
Oh, man, I love what I do, Tate. I've got the privilege and the honor of working with real estate investors and hands-on, helping them to set up everything they need to raise capital. That's what rocks my boat. Outside of that, my wife and I love traveling, so that's what we do for fun. Mm-hmm. And life is good. Life is good. I'm in a good spot right now and having a lot of fun with it.
That's great. Where have your favorite travel spots been over the last year or two?
You know what? We just got back recently from Italy. That was my first trip to Italy. It was my wife's third or fourth time there. But that was amazing. Really enjoyed that. And previous to that, we went and we visited the Balkans, which is very interesting. That was right at the beginning of the whole Russia-Ukraine war thing, right when hostilities started. Yeah. So it was interesting to see like Bosnia, Herzegovina, Serbia, those kind of countries that are a little bit more Russia-leaning versus Western-leaning, the different perspectives about things. So in addition to the history and the culture, it was really just a fascinating trip.
You have any favorite beach destinations? I'm kind of a beach guy.
Oh, man. I used to be a beach guy. And as you can see by my pasty white complexion, but I spent, believe it or not, Tate, 35 winters, almost every single December, going down to Bucerias, Nayarit in Mexico.
Oh, man.
So that probably the most familiar place I am. It's not the nicest beach in the world, but it's lovely beaches around there.
Dave, I discovered Sayulita 2 years ago. I went.
You want to hear something crazy about Sayulita, Tate?
Actually, a year and a half ago.
Because you saw the property prices when you're down there, I'm sure. Right? Yeah. My aunt bought a place on the beach there, whatever it is now, 30 years ago, for $27,000.
Mm-hmm. Yeah. Yeah. And for listeners,
it's like it's 1.5 million type thing now, at least.
I would argue that Sayulita is still a good buy, like even at pricing where it is, because it's a phenomenon now. For listeners, it's a very unique, kind of rustic, authentic Mexican surf town, not commercial. There's no chains. There's no big resorts. It's just a lot of culture, a great surf break, some of the best food I've ever had. And I've been there 4 times in the last 2 years. I cannot stay away. Yeah, I just keep going. In fact, and I just booked, I did a month in last November, 2022. I just this morning booked 2023, November, part of December, working remotely. Some guy got fed up with the lack of really good Wi-Fi down there, and he basically brought in 5G. And
well, can't we borrow some from Elon Musk or something like that?
At some point, that's probably going to be the way we all do it. But this isn't totally irrelevant, right? Like lifestyle choices and options are a big part of why a lot of us do what we do. You look at the 3 different types of freedom, right? You've got financial freedom, time freedom, and geographic freedom. And for some of us, some of that's more important than some of them are more important than others. Geographic freedom for me is really, it's real. Like I can do almost everything I do remotely, except for go to our markets, Columbus, Ohio, and Oklahoma City right now. or there are two markets that flies direct. Number one to Salt Lake City in 3 hours, which is home for me. And then all over the place in the rest of the country. So calling that base camp, right, for however long. And I've been playing with the idea of actually doing it for a year or something like half a year. But that's a very real possibility for me.
Oh, for sure, man.
Given the lifestyle that I've developed. And obviously my career, my companies, coaching, podcasting are all a part of that lifestyle, but it's a lifestyle by design,
Mm-hmm.
So
that's what it's all about, man. I lived in Costa Rica for 10 years, traveled around, when I was a young guy, did the backpack thing through Latin America, all that kind of stuff. Yeah, there's something to be said. And that's, my wife and I are looking at buying a place in Italy, kind of doing winters there. It's beautiful.
Yeah, that is beautiful. Italy's at the top of my list right now. So basically, just a great episode here, Dave. I'm super grateful. A few highlights: raise your profile to raise capital, right? Mm-hmm. Like
podcasting is the shortcut for that.
Yeah, and I would throw in, I think I probably put a little more emphasis on social media than you do. I think listen to some Gary Vaynerchuk. Listeners, if you're not familiar with Gary V, just do a search on YouTube on Gary V-E-E is short for his name. Gary V-E-E. Yeah, Gary Vaynerchuk is his full name. But he'll get in your ear about posting all the time about just whatever, right? And it's not about so much the content or the quality of the post. It's about that you are posting, that you're staying top of mind. Frequency, consistency, choose a cadence, right? 3-4 posts a week, maybe 5 posts a week. Some people go bigger, 20 posts a week. And you vary. There's different post types. You got like value add posts. You've got personal sharing, recreational posts. You've got call to action posts sometimes, and mix them up and
punch, jab, or jab, punch, right? Or whatever the book is.
Yeah. Jab, right hook or something along those lines.
That.
Yeah.
There you go. Yeah.
So I like Gary Vee a lot. He's not the be all end all for me, but on the social media thing, I think he's really inspiring.
Oh, he's amazing. When it comes to social media, he's definitely the guy.
I was looking through my notes. I want to just hit one more point with you here, because I think it'd be a lost opportunity not to. On the private equity side, right? Either preferred equity sources, the joint venture equity sources, et cetera. How do you get started in that?
What do you mean exactly?
How do you meet these equity sources, right? So and not your LPs, not your individual retail investors, but your family offices. And
I really don't have experience with that, Tate.
Oh, okay. I misunderstood. You mentioned something about JV equity earlier, and
I'm talking much smaller JVs.
Yes. Okay,
small deal JVs. Yeah, sorry about that.
Perfect. No.
Yeah, man. Well, hey, this has been great. I appreciate the opportunity.
Yeah.
And again, one last shout out for your listeners. If you're interested in getting started with the whole podcast guesting thing, I would love to have you on my show. Again, you can check that out. DaveInterviewsYou.com. It'll be a very fun, relaxed kind of conversational, great way for you to get your feet wet with podcasting.
How long are your episodes typically?
Typically 25 to 30 minutes.
Yeah. I mean, no pressure there, right? Like that'll be over before you know it. Like you won't even get to say everything you want to say. Yeah.
It's a good conversational type interview. Exactly. Yeah.
For sure. Awesome, Dave. Thank you so much, sir. Huge fan of you and what you bring to the table, and feel very grateful that you came back on the Apartment Gurus here and shared some really great, valuable stuff here today. So
likewise, Tate. Thank you so much. Can't wait to have you on the show as well.
Yeah. So listeners, again, it's been Dave Dubeau, Dubeau is how you spell his last name, on LinkedIn for sure, social media presence. Go find his website and find the daily podcast. Like
DaveInterviewsYou.com. That's the best one. DaveInterviewsYou.com. There you go.
Awesome. Thank you, sir. Thank you, listeners. We love you guys. So grateful for your continued listenership, and hopefully you're moving the needle, right? Like that's what I really in my heart want for you guys, is to take things from this and make an impact on you and your life, your business, your investors, your residents, whoever it is that you are impacting on a day-to-day basis. Hopefully this can be a part of that for you. So we're doing 2 a week as always. So 100 episodes a year, and we will see you on the next one, everybody. Take care. This episode of the Apartment Gurus is being brought to you by Greenlight Equity Group. Greenlight Equity Group acquires and operates cash-flowing multifamily assets in progressive metropolitan markets such as Salt Lake City, Idaho, San Antonio, Oklahoma City, and Columbus, Ohio. Greenlight targets consistent, solid returns for its investors and a healthy environment for residents by operating high-quality, safe, clean, affordable apartment communities. To learn more about Greenlight and to sign up for the investor list, go to www.glequitygroup.com.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.